Hi everyone, Frank Verney here. I want to welcome you to another edition of Real Estate Help by Frank. And I hope you're having an absolutely great day. You know, is it now time for home buyers to finally jump back in the market? Well, this New Year's, you may want to make a resolution to go house hunting. Home prices are starting to recover, but they're still low enough to get a great deal. Add to that the fact that interest rates are at historic lows, and 2013 may be the time for home buyers to finally get back in the game. It appears that home prices have bottomed, according to many economists, and right now buying looks very attractive. So there's a window of opportunity before prices start a faster upward march, which they have already begun in some markets. In the United States, the median price of an existing single-family home was $178,000 in October, up 11% from a year earlier, but that's still down from approximately $204,000 in October of 2007. Buyers can find particularly good deals in several areas of the country, including Sacramento, where home values are rising steadily, but are still more than 40% below the peak. Prices may be on the way up, but mortgage rates remain at historic lows, and rates are expected to stay low next year and further out, thanks in part to the Federal Reserve's moves to keep interest rates low until mid of 2015. Add the fact that as prices start to increase, some investors may actually begin to look elsewhere to put their money, so regular buyers may actually get a chance. Many first-time home buyers are opting for loans backed by the Federal Housing Administration, which is the FHA, since they have looser credit and down payment criteria compared with the criteria for standard loans. But the FHA is now facing billions of dollars of losses on loans that they originated between 2007 and 2009. Now, to help them bolster their finances, the agency recently announced a series of measures including higher annual upfront fees and insurance premiums, as well as a change to rules that allowed insurance premiums to lapse. But FHA still remains a great option for first-time home buyers. Many potential buyers have sat out the market and rented instead because they were waiting for prices to bottom out, found it to be a cheaper option, or just couldn't qualify for a mortgage. But the jump in renters after the housing collapse led to higher rents throughout much of the country. In many cases, it no longer makes any financial sense to rent instead of buy. In about 3 out of 4 U.S. housing markets, it now takes less than 3 years of owning a home with a standard 30-year mortgage for buying to be cheaper than renting a similar space. While the timing may be right, the tougher standards lenders imposed after the housing crash is still very much in place. So buyers with good credit and hefty down payment may benefit the most. Lenders are not returning to the lax standards of the boom market, when loans with no down payment and no documentation were very common. It's back to basics. That means good credit, a down payment, and documentation to cover everything. There's got to be a clear paper trail, so be prepared to break out the paperwork, lots of it. Borrowers will typically need a FICO credit score of at least 740 to qualify for the best rates on a standard mortgage. FHA-backed loans require a minimum 3.5% down payment, and lenders often require a minimum FICO score of about 620. But with the low prices and low interest rates, the window of opportunity will fade fast, so it makes sense to move now. I think it'll be worth it. Now, if you found this useful and someone you know could use the information, please forward or share it with them. I'd also appreciate any comments below. And by all means, please subscribe on the right to receive further updates. Feel free to contact me if you could use my help or have any additional questions. We'll see you again soon. Thanks and good luck.